G'day everyone, welcome back to Pete's Investing Updates. In this video we're reviewing the weekly progress of some key share market world indices as well as gold. This week we're going to focus on the ASX and see if there's any sign of recovery. It's had a bit of a dump overnight, so I just want to go through and review that in a bit more detail. If you want me to review an index or a commodity, put it in the comments and I'll cover it in a future video. But as always, don't forget to click on the subscribe button, the notification bell, and like the video to support the channel. So let's first look at the channel playlist, and that's where we review the indices each week. The share prices, we look at a bunch of handful of blue chip shares each week. And very importantly, our strategy playlist. And in that strategy playlist, we can find these videos to help explain the strategies we use, some money management ideas, and the Averagedown process. We're not offering financial advice, just an educational series to educate your trading approach. A couple of things to consider. We don't track, we track on a 15-minute chart. We review our revenue over the drawdown requirements, and this is shown as a percentage to optimize our returns with less exposure. We backtesting transacts with 5 contracts per trade to increase the revenue, that is the returns. Simply increase the number of contracts, but be aware this will also increase your drawdown, so ensure you have factored that into your money management strategy. And lastly, dividends are not included in our backtesting, so for all revenue regenerated, we can add a bit more to the bottom line when dividends are paid out, but we're not showing dividends in our results. So let's get started. First off, I want to first show you the results of the indices we're covering, and that's the ASX, the US market, the German DAX, the FTSE, China and gold. They're all doing quite nicely with the exception of China. That's been in a decline for the last few months. There's a few issues there regarding China. The government of the CCP, the Communist Party of China, is cracking down on businesses, and that's making it very unattractive for investors to get into the Chinese market. But without getting too political, let's go cover the other indices and see how they're performing. So again, here we're talking about the revenue that's held, and this is generated over a rolling 5-month period in our chart, 15-minute time frame. And the drawdown for each of these. The drawdown is basically from the highest profitability to the lowest level of profitability in any particular chart. So it's important to measure the revenue over the drawdown, and it's given as a percentage. So the higher the drawdown, the better the result. And lastly, we look at the average revenue on a monthly basis. So it's basically looking at that over a 5-month period, divided by 5 is basically that. And that generates out to about just under $3,500 a month. So we're going to focus on the ASX today. And that's where, first of all, this is all the indices in one chart. They're all shown as line charts. So you can see there, they're all going fairly okay. Last few hours or last couple of days, the US market and the Aussie market have dumped. And we're going to focus on this one in a bit more detail today. The gold is pretty much consolidating, and so is the FTSE and the DAX. The black one is the DAX, and the purple one is the FTSE. You can see here the Chinese market has been declining. There's a bit of an upsurge here, but we're not getting too excited. That may continue downward like it did back here. So it needs to break that high there for it to have any further upswing in the trend. This is the ASX on a daily chart. So it goes back to COVID here. If I go back even further, and I started back here in 2007, you can see what it did during the GFC. It dropped off dramatically, and we accumulated a few contracts there. We had a total of 20 positions open. Now our baseline of profitability is 100,000. That's what it shows you on that line there. So we dropped below our profitability level in the short term during the GFC stage. Then it recovered. You can see here. And after the COVID period, back in the start of 2020, it dropped off again. We didn't have any positions open then. We opened up another 5 contracts there in March. And it's been doing quite nicely, recovered quite nicely since then. It's recovered above our COVID levels. As you can see here, I've drawn here the moving average 200. It's been progressing quite nicely, tracking above there. And here where we opened up a position, back here, 5 contracts in July, it did quite nicely. Then it's dropping off and it's approaching back towards the moving average 200. So we're not panicking. although it's taken a bit of a dive in the last day or so. And this just shows you the profitability where we are doing since 2007, where we theoretically started our first trade. We've generated $48,000 on our daily chart. This is a 15-minute chart, and it just shows you more dramatically what it's done in the last 24 hours. The price has dropped off after opening back here in August. Again, this is on a 15-minute chart compared to the previous chart. And we're trading the 15-minute chart. We entered 5 contracts there, dropped enough according to our strategy, and then entered another 5 contracts there. So we've got 10 contracts open total. You can see here the profitability has dropped off in line with our price chart. Now the CCI, and this is the indicator we use to enter and exit the market, or enter the market. When the CCI moving average breaks above 0, like it did back here, we enter the market there. We've entered another position there. And we're not in a position to add any further to our positions here because it's still in a bit of a downswing. Now, the CCI is moving up, but we need to wait for it to break above that, if it in fact it's still in a depressed situation where it is down there. Now, this dotted line here is the last 100 days, last 200 days of the highs and lows. So it needs to, at this point, assuming it breaks above the CCI 100 here, and according to the current calculation, the average high lows of the last 200 days is 52. So what it's saying is, since our last entry back here, let's draw a line, pull up the ruler. It needs to drop, it needs to be below about 50 points. So that's 50 points there. If that breaks above the CCI 100, CCI 0 there, and it's still below that level there, we'll add another 5 contracts to the position. At the moment, we're far off that at the moment, so let's see how it goes and how it performs. Again, don't forget to hit the subscribe button, the notification bell, to get further updates as they appear, and we'll speak to you in a future video.